Hello and welcome to Long Investor. So today I want to talk about a potential penny gold stock, and that is Leviathan Gold. Ticker symbol LVX for Canadian stock, and their OTC ticker symbol is LVXFF. So before I get into this company, I want to spend a little time talking about where gold is heading for the next couple of years. Because if gold price doesn't do well, then every gold stock will not do well also. Here we have a weekly chart on gold. As I've mentioned in all my videos, technical analysis alone is not enough, and it all depends on the macro environment. So on a technical perspective, the weekly gold chart is forming a classic cup and handle pattern, where the bottom of the handle is about 1/3 of the cup height. And if this managed to break out, the target price would be the height of the cup on top of it. So we're looking at about 2600 level. So right now it all depends on the macro environment and some kind of catalyst for gold to break out. So first let's add in the S&P 500 on top. So gold is a risk off asset. It tends to do well when the stock market is not doing well. So let's zoom in looking at the daily chart, and let's go back to the 2008 financial crisis. So even gold is a risk off where the stock market is a risk on, they're not exactly in an inverse relationship. It just means that gold tends to do better than S&P and vice versa. So as you can see, by the end of 2007, the stock market has a slow economic growth. And then on September 2008, when the Lehman Brothers go bankrupt, it triggered the financial crisis. Now, although initially gold also dropped a little bit, but you see how gold recovered from the low to high for about 170%, while the stock market, the S&P 500, kind of stayed flat the whole time. And it wasn't until the S&P break even and go higher, then you see gold starting to come down. So if you're a retail trader, you bought stocks in here and you didn't average down along the way, so you're looking at waiting for from 2007 until 2013 before you break even. So there's 5 years of waiting time. And from 2013 until pre-COVID, S&P went from 1,600 to 3,200. So it's about 100% gain for S&P, while gold consolidate between this range throughout the whole time. And then recently when we have COVID in 2020, once again you see gold also drop a little bit, but then gold went from 1,400 to all the way to 2,000, while the S&P stayed flat again. And it wasn't until S&P break out from the previous high before gold consolidate within this range. So right now you have an idea of the relationship between the stock market and gold. You will want to pick the correct side every time, or else you will be holding the same amount of money throughout the years. Okay, so where are we right now? So since November and December of 2021, the inflation percent is like off the roof. So that sends signals to the market that the Fed will probably raise the interest rate, and it triggered a sell-off in the stock market where gold is starting to pick up. And of course, recently we have the Russia-Ukraine conflict issue, so which is a catalyst for gold. So you can see from February 24th, at the beginning of the invasion, gold rises 9% on top, and it recently broke down a little bit. So with that said, in order for gold to break out, we will need some kind of recession in the stock market. Now on my YouTube channel, in these two videos, I discussed that I believe there will be another bull run before a true recession will come. And so far my point of view still stands, so if you haven't watched it, you can check these two videos out. But let's say there is another bull run coming in and pushing the S&P to all-time high, or even higher than the all-time high. Gold will not fall down as we have seen before. It will most likely consolidate back in this range. And after the final bull run, when I think the true recession will come, then that's where we see the gold will have a breakout. Now, since the conflict between Russia and Ukraine spiked up a lot of commodity prices, and that will trigger inflation to a much higher rate at a faster pace. So if the conflict continues for who knows how long, and the Fed also mentioned they raise the interest rate 6 times, and depending how hard they raise the interest rate based on the how long the conflict will last, we might not see this bull run, and it will bring recession closer than I thought. So if you don't mind to ride out the volatility if there's a bull run, you could open a position on gold right now. But if there is a bull run on the stock market, I don't really see it go under the 1700 levels. And if the Russia-Ukraine conflict resolve within like the next month also, gold will probably fall down a little bit on the 1800 level. So if I were to get gold right now, I would add in at 1800, and depending on if the stock market has a bull run or not, I'll consider adding at the 1700 level. And this is not a get rich in a year play. It will take maybe 4 to 5 years until gold reach the all-time high target, which is 2600. And it also depends if the stock market will have another bull run or not. If it does have a bull run, if the Russia-Ukraine conflict resolve within like a month or so, then the bull run will possibly kick in, which might last for a year or so before the recession comes. So this is a long play, and for risk reward, I think it's worth it to invest in gold. Okay, so that's my point of view of where gold is heading in the next 5 and 6 years. So now let's talk about the company. So let's talk about the potential first before we talk about the risk. So there are two projects, Avoica and Timor. And these two is one of the richest mine in the back in the Victoria era. And these two mines has not been touched since World War One, and it was mainly explored between 1800 to early 1900. So in the 1800, when people are mining for gold, they're mainly using like a pickaxe and a shovel. So those mines has not dug more than 130 meters. And 100 years later, right now we have modern technology to dig deeper, and some of the mines go as deep as 3 kilometers down. So there are a lot of potential of what is underneath. So when the company IPO on February 2021, the first thing they do is to drill down and see if there are gold reserve underneath. So in April, they did find some gold underneath. And in October, they commenced another drilling. And as of last week, they have the result. So here you see they get 3 grams per ton on a 230 meters, and then 4 grams, 240 meters. And the one that I'm paying attention to is this one, 18 grams from a 333 meters. So I was wondering how good this is, and I was reading up on some articles. So one of the articles I found is this one. So one of the mine, they found 12.2 grams of gold per ton at a depth of 216 meters, and it is considered a rich mine, which helped the stock run from $2 to $22. So in this finding, they have 18 grams per ton, which is 50% more than the mines found in here, but it is also 100 meters deeper, so it also brings a little bit of cost to extract the gold. But overall, I would consider this is a pretty rich mine. So those are the potential that they are sitting on one of the rich mines which hasn't explored since World War One. And upon drilling, they did find more gold reserve underneath, so which is the good news. So that gold is not just on the surface. So now onto the risk. And first, let's take a look at their chart. Now their chart does not look good at all. So the IPO out in February for 70 cents, and since then it has been pretty much dropping for almost 90% to as low as 9 cents. So you put the S&P on top. Now I'm not defending them, I'm just simply pointing out what may have happened to them. So remember when I said when the market is on a risk on move, the gold tends to not do as well, and it will mostly consolidate within a certain range. And with gold price not doing much and they're a new IPO company with nothing to sell at that moment, we pretty much will know that it won't do too well over time. So the job kind of makes sense through last year. So now they found a pretty good location for where to mine the gold. But for mining, extracting, refining, and actually sell the gold out, I think it will probably take 2 years or so to do so. And they IPO with 11 million cash, but this has not been updated since last year. And although I have found some financial result on, let's say, Yahoo News and other places, but they don't have one on their official site, so I'm not sure how accurate those are. So all this drilling is expenses, and they have their monthly expenses and etc. And when this 11 million cash is all spent out, they will probably do share offerings, which will lower the share price. So that's one of the risks that you have to consider. And the other risk is that, as I mentioned, if the stock market does have another bull run, we may see the stock price of LVX going down further. Although they are somewhat aligned with the gold price, but since they're a penny stock, it won't be as in line as something, let's say, Barrick Gold. And also the risk for any penny stock, they may go bankrupt and you will lose all your money. So if you do invest in it, do not go all in, like put in pocket change or money that you can afford to lose completely. And this stock is also not very well known. If I search on YouTube on Leviathan Gold, I only see like 2-3 results. And I've always mentioned, as for investing, it's all about the risk-reward ratio. And same as gold, this is not a get rich in a year play. This is more of a 5 to 6 year play. So I think it's worth it to keep it in your watch list. And maybe wait until they do share offering when, usually stocks drop like 20-30% on share offerings. Maybe wait until then to get into stocks. And if there is a bull run on the stock market, we might see it jumping below the previous low. If there's no bull run on the stock market, we might see the gold prices going up, and which might benefit LVX until they have share offering. So if you do want to get in, I will put a very small amount right now and add in more when they have share offering, or if there is a bull run on the stock market, which will drive the share price lower. But if you do have some spare cash that you can afford to lose, and you can also afford to wait 5 to 6 years, I think this is a pretty good candidate for a penny stock. So this is all I wanted to share today, and I'll see you guys next time.